Crypto. It's an amazing vehicle for making money because of the extreme volatility of the market. Prices swing up, prices swing down. It's a trader's delight, especially on some of these altcoins. There are endless opportunities to profit as long as you've got the right trading platform and the right mindset and strategies. You got to be familiar with the market, and you got to get to know the basics of reading some of the simple chart patterns and using some of the simple indicators that can help you in your technical analysis journey. So in this video, we're going to do a basic cover of Bitunix, which is one of the best crypto trading platforms out there, as well as some simple advice and strategies that you can use to make $100 or more a day trading crypto. Of course, this is just a starter, and we could honestly make this video an hour long, maybe two. In fact, we might make a video like that pretty soon, so make sure you have notifications turned on before we drop that video. But if you want to dive into the complexities of trading, there's a lot to go through. But I want to cover some of the basics here to get you started, especially if you're new or you're a beginner in the markets, okay? We're going to stick to the necessities here. By the way, keeping it simple can often be one of the most profitable approaches. A lot of people way overcomplicate it. 50 different indicators. You don't need 50 different indicators. You can have just a couple of different things that you use, trends or whatever, to identify profitable trades. So first of all, let's recap. Why use Bitunix? Well, this is my preferred platform for trading because guess what? There's no KYC. You can trade with privacy. There's a huge range of token listings, great liquidity, great security, and also an important factor if you want to trade with extra size, Bitunix offers great amounts of leverage on top coins with very deep liquidity, okay? There are, of course, risks involved in trading cryptocurrencies and particularly in using leverage. We're going to discuss some of that here in a few minutes. Now, before we go and place a trade, we have to run through some of the different things you need to know. But before that, if you're new to Bitunix, there's actually a link right down below me here that you can use to actually go and start your account. And then you will get an exclusive 20% deposit bonus. So you deposit $1,000, you're gonna get $200 back, which is absolutely crazy, okay? Link down below in the description. Go and check it out if you're new to Bitunix, okay? And looking for a great place to trade. So let's talk about trading preparation. Basically here, you're looking to profit from short-term price movements. We're not talking about taking long-term spot positions where you're buying something and holding it for 2 years or whatever, right? We're talking about getting in and out. You're going to trade for a couple of days, for example. Okay, very different from buying and holding Bitcoin or whatever, something like that. You're trading meme coins, you're trading altcoins. You don't matter really what it is you're trading. You're looking at the charts and you're making plays based on that. And when you're trading day to day, fundamentals don't really matter as much because you're looking at price action, you're looking at charts, you're looking at momentum. And remember, a lot of smaller tokens trade primarily on attention, especially stuff like meme coins. So here's what you need to think about. You want to select coins with good volatility. So focus on tokens with significant price fluctuations, that good volumes that traders are interested in, that people talk about, that show strength. It can be a good idea to get familiar with just a few different coins in their charts. Like there's probably 7 or 8 coins that I look at the charts out on a regular basis I'm very familiar with, okay? And I can successfully trade those as a result. Also, even though we're focused on price action, if you have an idea of how a particular coin is developing or updating, that information can be useful as well. You have buy the rumors, sell the news events and stuff like that. Big news can move prices in ways that break established chart patterns or sometimes line up with good breakouts in the chart patterns, okay? So look for those identifiable trends, use the charts and look for price action that seems easy to read, okay? If a coin is moving predictably within a clear range, it's easier to position on. You also want to plan your entry and exit points accordingly. So related to the point above here, you need to be defining in advance the price levels where you will enter and exit trades. You have to be patient. You have to let trades come to you, okay? Look for supports and breakouts and stuff like that. Don't just blindly jump into a trade and then plan your exit. Where are you going to sell? Okay, remember short-term trading here, right? We're not holding these things for a cycle. Also, here are a few beginner trading tips. Start small, okay? Practice with safe amounts before gradually increasing your capital, okay? You don't need to come in with your full portfolio. Start with $100. Keep it simple. Begin trading spot first as well. Add leverage later. It's a much more advanced tool. So at first, just place a few spot trades, guys. Keep it simple. If they're going the right way and you're starting to figure out some strategies that work for you, then you can start to add leverage. But again, you probably just want to start small. Maybe 2x leverage is all you really need, okay? Max 5x. You don't need 100x leverage, it's crazy stuff. Next, don't get emotional. Sounds simple, but beware when you're feeling the FOMO and don't act on it, okay? Read the charts, let the charts speak to you. Don't try to force your ideas onto the charts, okay? Also, after a big gain or a big loss, take a moment to get your head together, okay? Don't revenge trade or don't let your ego be like, I'm the boss trader, I'm gonna go throw all my money straight back in. Wait, okay? Stick to the plan, avoid impulsive decisions. So, placing a spot order on Bitunix. For this, you need to click on spot. Of course, you've already deposited some crypto like some USDT over here so that you can start trading. So you click on spot, you search for the token pair that you want to trade. As I said, you should already have some ideas about what coins you like trading or the charts that you like and how they're behaving rather than just randomly pulling up a token and going, that one looks good, let's throw some money in. It's not how it works. As an example here, let's use Solana. So we're gonna start with the easiest option. This is a market order. It's good for small orders, but if you're buying $1 million worth of coin or something, you probably don't want to do a market order because you're gonna experience a lot of slippage. But it's really just a case here of specifying the amount you wanna buy, $100 worth, and click the buy button. When you sell, it's just as easy. You wanna sell $200 worth of this coin, click sell button. Boom, it's done. Best price in the market. Market orders, of course, you want to buy low and sell high as always, and that's really it. Of course, with leverage, you can try to buy high and then sell low, but that's for us to talk about in a minute. The other order is a spot limit order. Again, that's just aiming to buy low and sell high, but in this case, we set a price at which to buy. Say, for example, we're going to buy Solana at $200 and sell it at $220. So in this situation, the order only executes when the price gets at $200 for your buy and $220 for your sell. Okay, so why do you want to use limit orders? Well, one reason is that you can set them and then just forget about them. Go about your life, wait for your prices to get hit, your targets to get hit. It's a great way to take profits too, setting those limit sell orders. Another is that they require you to make a plan in advance, so they can be very good for maintaining discipline. You set those limit sell orders and then you forget them and you just wait for them to get hit, okay? You don't sit there thinking about it, oh, should I sell now or not? It's already been automated. You made a decision early. Just let the trade play out. That said though, remember that limit orders won't always get filled. It depends on how the price moves. And if you just want to execute a quick and immediate trade, then a market order will do that. But that should only be on the basis that you see a breakout happening or a retest of support or something when you open up and look at the charts, okay? It shouldn't just be, well, price is in the middle of nowhere. I'll just buy some because why not? That's how you lose money. So trading spot's fine and sometimes the best option. But the excitement ramps up a bit when you start trading with leverage. Plus it also gives the option to short if you think the price is going to go down. So using leverage means using some of your own capital called margin and adding some funds borrowed from the exchange to increase the size of your position, meaning the sizes of your gains and losses get amplified, okay? So if you use 5x leverage and the price goes up 20%, you double your money. Price goes down 20%, you're losing your money, okay? So you have to pay a funding rate while the position is open, and of course you also have a liquidation price. This is the price that if it gets hit, then the position is automatically closed and you lose all your money, okay? You probably want to use stop losses to avoid that happening. One more thing too, you can also take short positions and bet on the price going down, as we mentioned. So basically in that situation, you're buying Solana at $200 and you're trying to sell it at $150, for example. It's a whole nother skill, a whole nother level of trading experience. You probably want to look for long setups that is the price going up first, okay? And then learn about shorting later. Okay, so how to do this? Well, first go to your spot account, click on transfer, move some funds to your futures accounts called USDT. Then click on futures, select your trading pair. Again, we're going to use Solana as the example here. You use market or limit order as before. You'll set a quantity, but now we've got some additional parameters. You see, you're going to need to set the leverage level. So start at the very bottom, just 2x is fine at first. Also, you'll want to set the margin mode to isolated, especially if you're starting out. There is a cross margin, which basically exposes your entire trading account to liquidation, which is not really what you want. So isolated keeps it just on that one trade. Keeps all your trades separate and it's the safest option to use as a default. Now, as mentioned, in a leverage position, you have a liquidation price. You hit that and it's game over. All your money's gone, okay? The other additional thing that you can add, actually you don't have to, but it is recommended, is using the TP/SL option. So take profit, stop loss. You preset the limit orders for when you will exit a position if the market starts turning against you and when you'll exit a position to take profits. Set it and forget it, okay? TP, take profit, will automatically close the position at a set price above your entry. SL, stop loss, will do the opposite and close the position at a loss below your entry. Now, if the price goes up, you can actually move your stop loss up and move it into profit. So if the price does come back down, you guarantee your profits, which is a nice little bit of alpha to use. Now, to limit losses and save you from liquidation, stop losses are essential, so please do use them. So to set the TPSL in the buy TPSL, click open long if you're going to long, of course, betting on the price rising. We're not talking about shorting here. Or use sell PPSL and open short if you're going to go short, betting the price is going to fall. Okay, remember, if you go short, your take profit and stop loss are reversed. So the take profit is lower than your entry. Again, you buy at 200, you want to sell at 150, and your stop loss is at like 210. For example. Now you can monitor your open position below the chart and you can make changes there too, like altering the margin, adding more margin if you're getting close to liquidation, all that kind of stuff. But you want to keep the trade open and you can manually close the position as well early too, okay? Also, you can make changes using the markers on the charts here. And those are really the basics of how to go and make a trade here on Bitunix using leverage. We talked about spot, we talked about how to use a bit of leverage, but to help with figuring out those entries and exits, let's talk about some useful chart patterns and indicators. And look, honestly, every single one of these could have its own dedicated video. We're just gonna cover some very, very basic ideas here, show you a few pictures. We've got a whole trading course linked down below. If you wanna learn some more information, you can go check that out as well. Lots of great free resources out there online too. First, head and shoulders. Now this indicates a potential price reversal from bullish to bearish, while an inverted head and shoulders, that's an upside down one, can indicate the opposite. We have double top patterns, signaling a possible trend reversal to bearish. We have double bottom patterns, which is the opposite, meaning a possible trend reversal to bullish. We have ascending and descending triangles. Now these are continuation patterns that can show directional breakout points in a market. We have stuff like flags and pennants. These can suggest strong trend continuation, either up or down, depending on the broader trend of the market. If prices have been going up and you see a triangle or a flag forming, means we have a continuation pattern likely to go up. And to go with those, here are some supporting indicators that you can place on the charts as well. We have moving averages. Now these show average prices over certain periods of time, highlighting trends and often acting as areas of support and resistance. I like using exponential moving averages over simple moving averages. Just as a note here, because they're more reactive to recent price action. The 50 and 20 and 100 day or 100 period, if you're using the 4-hour charts, can be pretty good too. Next, we have the RSI, or Relative Strength Index. This measures momentum. It can sometimes identify overbought and oversold conditions when it gets either very high or very low, basically dropping out of that purple box. That said, though, in a bull market, the RSI can remain elevated for a long time, and in a bear market, the opposite can happen, where it can remain very oversold for a long time. So always consider broader market conditions and sentiment. You need to put this together with other indicators. We also have the MACD, one of my favorites for measuring momentum. This is the moving average convergence divergence. This reveals trend strength and signals potentials reversals, both bearish and bullish reversals. We have stuff like the Fibonacci retracement levels too. These indicate key levels that can act as support and resistance. And look, what I've just mentioned here, if you can just get a good handle of that stuff right there, it's going to be enough to consistently make money trading in these markets. Please remember though that all these patterns and all these indicators are not 100% reliable. It's like playing poker, okay? You have statistical chances of success when you see certain things happening, okay? Which is why we always use stop losses, because no one has a crystal ball. But if several of these tools all point in the same direction, that helps give you a bit better odds, right? A bit of a stronger signal. Overall, though, it's all about putting things into action, taking risks, and getting familiar with the coins, the market, the platform itself. Again, I really like using Bitunix. I do a lot of my trading over there these days. And really the whole trading experience, learning how to identify these chart patterns, learning how to use MACD and RSI and all this stuff. It's not rocket science. You just got to start doing it. You just got to start doing it, okay? And of course, always make sure to manage your risk carefully by using those stop losses, never risking your whole portfolio on a single trade. Any single trade should be a few percentage points of your portfolio, okay? Have fun, get learning, jump in, experiment a little bit. Thanks for watching.